Rally. Some of these names year to date have been absolutely flying, including Tesla. Shares edging higher for a 12th consecutive day, marking the longest winning streak on record. KGI upgrading the stock to outperform, saying this: Tesla's automotive investments in the US are paying off. Its AI prowess is underrated. We're up by another 1.75, up another 1.8% this morning, Katie.
And if that holds, of course, that will be that 12th day of gains, which is a record winning streak for this stock. And there's a few different things that got us here, fundamental reasons too. Most notably, in the past few weeks, you've had the likes of Ford and GM saying that they're going to adapt their EVs to hook into Tesla's superchargers.
Today, we're diving into a topic that is on the minds of many Tesla investors: the wait for a Tesla stock pullback. Amidst the rising stock price, some Tesla investors may actually be waiting for a stock pullback before buying Tesla shares. Whether it's through technical and fundamental analysis, evaluating market sentiment, or seeking attractive entry points, investors are navigating the complex world of Tesla stock with an eye that is keen on long-term gains. Timing the market and assessing valuation are considerations that prudent investors weigh carefully, and it seems that the waiting game for Tesla stock and its pullback is currently at play. Are investors biding their time, waiting for the perfect entry point into the Tesla train? Join us as we uncover the strategies, considerations, and factors behind this intriguing investor behavior. Also, get ready for a captivating discussion that's going to challenge your perceptions and leave you eager for insights that you won't find anywhere else.
Welcome back to Trading 360. It's time for the 360 round. We're talking all things EVs. For that, let's bring in our panel. Ivan Feinseth, the Senior Partner, Chief Investment Officer, and Director of Research at Tigris Financial Partners. Mark Mills is author of Cloud Revolution and Senior Fellow at the Manhattan Institute. Ivan, Mark, great to have you both here with us. Ivan, let's start with you. We're talking about this GM EV deal with Tesla. Their EVs will plug into Tesla superchargers, and its EVs will actually use the same charging hardware as Tesla starting in 2025, giving shares of both Tesla and GM a boost today. Would you be a buyer of Tesla and GM on this news?
Yes, I'm definitely a buyer of GM. We have a strong buy rating, and it's our #1 pick in the auto sector. I'm still a believer in Tesla and would be a buyer any pullbacks. The stock has had a huge run recently over the past month or so I would look to buy more aggressively on pullbacks. But this is positive news for the overall auto industry and for Tesla and GM as we move forward to this ongoing conversion to electric vehicles.
As a bearish analyst once said, the Tesla investment story hangs on high expectations and low probability outcomes. Tesla, the electric vehicle titan, has been on a meteoric rise in the stock market, captivating investors and breaking records. One of the things that Tesla is setting itself apart with when it comes to other automakers is its margins, which tend to be high in the industry. In 2022, the company generated total revenue of $81.5 billion, compared to an operating income of $13.7 billion, a margin of 16.8%. And things are expected to get even better this year. However, some investors may be hesitating, waiting for a stock pullback before taking the plunge. While this may be a good investment strategy, it may also come with its own limitations. Hey everyone, and welcome back to Tesla Tomorrow. Tesla has the potential to disrupt the automotive and power generation industries with its technology for EVs, autonomous vehicles, batteries, and solar generation systems. The car maker could see higher profit margins as it reduces unit production costs over the next several years. Through the combination of its industry-leading technology and unique supercharger network, Tesla offers the best function of any EV on the market, which is why investing in this game-changing company may be a once-in-a-lifetime opportunity. However, investing is a delicate dance of timing, and some investors practice the art of waiting for a pullback to maximize their potential gains. The beauty of buying at a lower price is tempting, as it can increase the potential for future profits. But is timing the market a viable strategy, or does it carry its own risks? Let's explore the factors that make investors consider a more cautious approach to Tesla stock. But before we start, if you like this type of content, hit that like button, subscribe to the channel, and turn on notifications to keep up to date on everything going on with Tesla. Investors who await a Tesla stock pullback may be exercising prudent risk management. A price correction can offer a more attractive valuation, allowing investors to enter the market at a more affordable price. By patiently assessing the company's fundamental and financial analysis, investors can gauge the stock's true value and make more informed investment decisions. The stock market is a dynamic and ever-changing landscape, often characterized by volatility and investor sentiment. A pullback in Tesla stock can be influenced by broader market conditions or fluctuations specific to the company itself. Investors may sense market psychology shifting, with profit-taking and short-term corrections leading to a temporary dip in the stock price, and this presents an opportunity for those who prefer a more cautious approach. Several analysts have already spoken out about waiting for a pullback before buying some Tesla shares. After Tesla CEO Elon Musk announced that the electric vehicle maker would try advertising and teased 2 new products. CFRA analyst Garrett Nelson reiterated his strong buy rating for the Tesla stock, stating that he considers Musk's comments at Tesla's annual meeting to be quite positive. This came when Tesla's stock tumbled following drops in the company's earnings. And according to the analyst, the stock pullback could be a buying opportunity for investors. Nelson reiterated his $250 stock price target, further stating delivery targets for the Cybertruck, stating that he would reconsider his stance on Tesla when the automaker takes on traditional advertising, producing a new kind of drivetrain that uses less silicon carbide and rare earth elements and switches to a lower voltage architecture for the vehicles. Nelson wrote in a note to clients, "While history has shown that Musk's predictions should be taken with a grain of salt, we do think Tesla is leading the autonomous driving race and view the stock pullback since the end of Q1 as a buying opportunity." Technical and fundamental analysis plays a vital role in investors' decision-making processes. Waiting for a pullback allows investors to closely examine the stock's technical indicators, such as support and resistance levels, moving averages, and trend analysis. Furthermore, analyzing Tesla's fundamentals, such as revenue growth, profitability, and competitive positioning, can provide valuable insight into the company's long-term prospects. However, while waiting for a stock pullback can be a strategic move, it's essential to maintain a long-term perspective. Tesla stock has demonstrated remarkable growth over the years, and investors must consider the company's potential for future expansion, innovation, and market dominance. There are several explanations for Tesla's incredible profitability. First, the company's recognizable brand means that it doesn't have to spend money on advertising and promotion. The car company has also worked to unlock manufacturing efficiencies and vertical integration, expanding its battery manufacturing capacity by bypassing dealership networks by selling cars directly to customers. And this means better margins and bigger profits for the company. Tesla aims to maintain its market leader status as EVs grow from a niche market to mass consumer adoption. To meet growing demand, the car company opened 2 new factories in 2022, which increased its production capacity. Tesla invests around 4% of its sales in research and development, focusing on improving its market-leading technology and reducing its manufacturing costs. Its energy business is also another one to look out for. Orders are surging for Tesla Powerwalls and Megapacks, which are designed to store solar energy for households and reduce businesses' reliances on electrical grids. Tesla management expects demand to stay strong, and so it's ramping up production at the company's dedicated battery pack factory in California. By aligning investment decisions with long-term outlooks, investors can balance the short-term market volatility with the potential reward of holding a transformative company like Tesla. But what do you think? What are your thoughts on waiting for a stock pullback before investing? Do you think investors should wait before the pullback happens, before they buy Tesla shares, or do it afterwards? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.